Hey guys, good morning. It's Fred with SmartRate Mortgage Brokers. Today is Monday, November the 18th. And holy shit, I forgot to call my ex-wife and tell her happy birthday yesterday. Melanie, if you're watching this, happy birthday. I'm sorry I missed it. I hope you had a great day, you and Marcelo. Anyhow, today's Mortgage Minute, we're going to be talking about what you can afford, a quick and easy calculation. I know it's dark out here, but it's about 6 o'clock and I'm headed to the gym, so stay tuned. Here we go. Hey guys, Fred Camarillo with SmartRate Mortgage Brokers. So in today's Monday Minute, we're going to talk about how we can quickly have a conversation with a buyer about how much they could possibly afford. So sometimes my agents, you guys are, meeting friends, family, Facebook friends, and they say, well, I don't know how much I can afford. And sometimes you guys, agents, like to give as much information as possible. So a good rule of thumb and a good measurement that I use, because I've been doing this for a long time, is to take someone's income times 3. You make $50,000 for the year, times 3, you could probably buy a house that's about $150 or so. Let's dive into that further and let's just make sure, because you know me, I like to make sure we talk facts, figures. This is no approximates, this is no estimates. Let's look at what today's rates are. Let's just make sure that is correct. So again, I say about 3 times your income. You make $50,000, you could probably afford a house that's about $150. There is some reverse math in that you can do 80 cents for every 1,000. So if you buy a $200,000 house times 0.80, about $1,600. So again, let's look at this real quick. Let's make sure those numbers are accurate. Be right back. Okay, so let's talk about how this is all possible. So let's say that you do make $50,000 for the year. Divided by 12 months, you make about $41.66 for the year. Now, FHA says that your proposed housing payment can be, you know what, now that I think about this, really, I don't think there's any defined rule. It's all based on risk. So in my experience, I have seen a good rule of thumb and a good measurement is about a third of your income should be going to your house payment. So 33% or a third of 41.66 is about 13.74. Now, I have seen in situations where I've had folks with stellar credit and little to no debts be able to qualify for a housing payment that's 40% of their income. So at 41.66, 40%, you could get a mortgage payment that's $1,666. I hate that number. $1,668, let's call it. That's your potential max housing payment. Now, keep in mind, they also say that your debt to income ratio could be no more than about 50%. Again, great credit. We could see something like 0.55%. Done many of those with folks, above 700 credit score. So 41.66 at 50%, your total debts. Now that includes your house payment plus any car payments, credit cards, any of that other stuff, cannot be no more than $2,083. Anything that'll show up on your credit report, not your phone bill, not CPS, not water bill, anything that shows up as on your credit report as a finance liability. So let's look at that again real quick. So 2,083, that's 50% of your income. 2,083 minus 1,374, which was 33%, which is a $150,000 house. You could have $709 left for anything else. That would include like a car payment, credit cards, student loans, things like that. Now, let's say that you didn't have any other debts, or maybe you had 1 or 2 small credit cards. 2,083, again, which is 50% debt to income ratio. And let's say you wanted to max out and buy a $200,000 house, because remember Fred said that it's about $1,600 for a $200,000 mortgage payment. You could still have extra income left over for any other debts. Like maybe you had a couple of student loans and they were like $100. You would still be okay. So in this case here, if you wanted to max out your debt to income ratio, you would be at a 40 front end and a 50 back end, roughly, if you had 417. And that's totally good. That's permissible by FHA standards and possibly like conventional. So let's talk about what the payments look like, and let's break down the payments next. All right, guys, let's take a look real quick. Let's just make sure that Fred is accurate. So let's see. This is my price sheet from one of my my lenders. So this is 1118. We're looking at a $200,000 sales price, FHA 3.5% down. Let's see. We put in a 680 credit score. All right. So here we are looking at FHA. So today's rate, we are looking at a 3.126, which is at par. However, what I would probably do is I probably would talk to them, about maybe something, along the lines of one of these two rates, maybe even like a 2.99. It might cost like half a point. So FHA, 680 credit score. That's awesome. Since we're talking about this, if your client needs help, I would offer them a 3.625. The lender would bump the rate up a little bit, but they would give back nearly $4,000 to help with closing costs. So they can get a 3.625 and get about $4,000 in closing costs. That's awesome. So Fred was right. So Fred did say 80 cents for every 1,000. So here's 200,000 at 3.126 par, principal and interest, mortgage insurance, your insurance, your taxes, $1,497. I said $1,600, but you know what? Now that I think back, that was when I was in the retail world. Rates were a little bit higher. They weren't, what they at today on the broker side. So, that's probably why. On 150,000, you're looking at 1143. Again, this is assuming 2.65 in taxes for both of these and 960 annual for the insurance. So, again, guys, if you're looking at giving your clients just a quick snippet of what a mortgage payment might look like, we're talking about, 80 cents on the dollar, roughly, and that's on the high side, or about 3 times their income. If you guys have any questions, please reach out. My telephone number is 210-287-6866. Call or text anytime. Hope you guys have a good rest of the day. Adios. Hey guys, I just had to come back on real quick and just go over one last thing. Earlier I was saying that FHA allows you to have a mortgage payment of about no more than 40% of your income, which would be $1,668 in this particular case. I also just showed you that for $200,000, the payment was $1,497. Guys, if you are not getting a competitive rate by your lender, please shop your mortgage for the absolute lowest rate today. That's smart. Again, shop your mortgage for the absolute lowest rate today. That's smart because look, you can get, if your family is having a hard time getting into a home, perhaps maybe you can go to the other side of the neighborhood or it's a gated community or maybe houses on a different platform. I could probably get this up to about maybe $220, $230 because remember, we said FHA will allow you for your max housing payment $1,668. Here it's $1,497. So this could be $220, $230. I don't even want to take out a calculator at this point, and just because it just this is exactly why I did what I did and go from the retail side to the broker side, because my clients, you guys deserve to have rates this low, if not even lower. So reach out to me, please call me 210-287-6866. Have a great rest of the day. Adios.